All right, hello everybody. This is Mike Rixey. I am the lead options instructor for Netpicks, and this is our options trade of the week. Before we get to our brand new trade for this coming week, we're going to take a look back at a couple of our recent trades that we covered in previous videos. For those of you that are in those trades, you have an update on what we're looking for, how we're going to manage those trades as they get closer to completion over the next couple of weeks. So let's go ahead and dive in and start out with VXX. This is the volatility ETF that we talked about here in one of our previous videos. And I should point out, if you have not had a chance to review those videos, highly recommend that you go back and take a look at the last couple of posts in this series, as it can give you a glimpse into how we typically trade at Netpicks. And what we did on VXX, this trade was initially put out on July 12th. And in that video, we talked about how volatility was approaching the lower end of the range that we typically see on volatility historically. We are reaching a level that we don't typically see broken all that often. And as a result, we are expecting volatility to start to stabilize or even expand in the weeks to come. Now, on top of that, the time of the year also played into that trade, because we know, we've seen it historically, the first half of July tends to be slower, but as you start to get into the end of July, into August, we tend to see things start to pick up. First of all, we have earnings season that really kicks into high gear towards the end of July. And then beyond that, as we start to get the school season to start kicking back in, markets tend to follow the school cycle, and we start to see things pick up going into the month of August. As a result, we came in and we sold a put spread using the August monthly options. Now, why am I using a credit spread here, and why have we been using so many of them in previous videos? It's because this time of year tends to be slower. We don't typically see the back and forth movement. We don't see the wild volatility. It tends to be a slower time of the year. So instead of trying to force the long calls and long puts to work, because those trades are very time sensitive, you need quick movement in your direction for those trades to work, we have been using more credit spreads where the time decay is working in our favor. That way, if the move does not happen immediately, if it takes a little bit longer than expected, we can still make money. Do we have the home run profit potential? No, we don't, but we do get a much higher winning percentage because we have multiple ways of making money on the trade. A lot of times people get intimidated by a credit spread because they think they're risky. They're actually not. What we talked about in the previous video, we showed how it was a fully risk-defined trade. I knew what my worst case scenario was right up front before I ever pulled the trigger on the trade. And what we did, we went to the August 16 options. They still have 25 days left to expiration, so we still have time to hold this position. And we came in and we sold the 22-20 put spread. So let me go ahead and pop that trade up down at the bottom. And we are going to sell the 22 puts, and we're going to buy the 20 put at the same time. By doing so, we collected right around 79 cents or $79 per spread when we put this trade on initially. It's now trading for around $67 or 67 cents. We've got a small profit on this trade. Now, the neat part about this, if I go ahead and pull up a daily chart of VXX, and let me go ahead and do that right now, you'll notice that has volatility really expanded much since we put this trade on back on the 12th. We put the trade on back in this range right here where I have my crosshairs. Volatility has essentially just moved sideways. We really have not seen volatility pick up all that much, but we're still up money. Are we up huge? No. Okay, we're up a few pennies, but the point here, this is why credit spreads can be so powerful. I don't need a big directional move in my favor. If we just move straight sideways, I'm still generating some income. I love to trade long calls and long puts. It's a big part of our strategy long term. But if the market is not moving well, if it's not showing big signs of volatility, big moves back and forth, I'm not going to try to force the long calls and long puts to work. I'd rather generate some consistent income, give up that home run profit potential in exchange for having multiple ways of making money on the trade. So we really haven't seen a big move higher on VXX yet, and we're still up $12 per spread. Where's my target level on the trade? What am I doing on this position? I'm going to continue to hold it. We have 25 days left to expiration. I need VXX to stay above 22. As long as it does so, if it just moves straight sideways over the next 25 days, that's fine. I can work with that. If it moves higher from here, so long as it stays above 22, I get to make money. The only move that hurts me is a move down below 22, which, as we talked about in the previous video, we're not expecting. because the volatility is already near the lower end of the historic range that we've seen. My target level is 50 to 75% of whatever I collect to put the trade on. I collected right around 80 cents, 79 cents to be exact. My target zone is if I can buy this spread back for between 20 and 40 cents. I have a working closing order for 20 cents here at this point. I'm looking to buy the spread back for 20 cents anytime between now and the next 25 days. If that happens, it's going to give me roughly $60 of profit per spread. Okay, so it gives me a really nice profit potential. It only tied up just over $100 of capital per spread to begin with, so it's not a huge capital intensive trade. You can put this on regardless of your account size. So all that to say, we're going to continue to hold the position. Nothing needs to be done here. We'll continue to hold the trade as is. No adjustments needed. We'll cover it again next week. Take a closer look, see what happens between now and then. See if we want to take action at that point. If we go back a little bit further than that, going back to the end of June 28th to be exact, we put on a position on GLD, which is the gold ETF, and we came in and we sold a call spread in the August monthly options. Again, the options with 25 days left to expiration. And we sold the 137, 138 call spread. That means I'm selling the 137 call and I'm buying the 138 call at the same time. That gives me a risk-defined trade. It is a neutral to bearish position. I'm looking for gold to move to the downside. Just like VXX, we're using a credit spread here because we want multiple ways of making money on the position. Okay, I'm giving up my home run profit potential in exchange for a higher winning percentage long term. Now, we collected on this position. We collected 48 cents when we put this trade on. It is now trading for 26 cents. We're approaching a 50% profit level on this trade. Where is my closing order? Where am I looking to get out of this position? I'm looking to buy this thing back for between 12 and 24 cents. That would give me 50 to 75% of my max profit. I have a working closing order on this one at 12 cents. Looking to buy it back for 12 cents. That would give me a nice profit. Again, do I have the home run profit potential here of just buying a long put? I don't, but in exchange, all I need gold to do is stay below 137. As long as it does, I don't care if it closes at 136.99. If it stays below my short strike, I'm going to make money on the position. I make money from time decay adding up, so every day that passes, that helps me, and I make money from volatility decreasing. So have we seen a big move in gold? We actually have seen gold pretty active here. But we've seen some good back and forth. We've actually seen some decent two-way price action on gold. So it's actually worked out well in our favor so far. Again, we're going to continue to hold the trade into the rest of this week. We'll revisit it next week, see if we can close it out. Again, anywhere between 12 and 24 cents would be a desired target range for us. So if you've got this position on, you can create a closing order anywhere inside of that range, and that's what we're looking for on this position. Okay, so those are our two open trades that we have on. We're actually going to add to it this week. We're going to add in a brand new trade. And let me go over to the chart and let's take a look at Micron Technology, symbol MU. You'll notice on this chart, this is a very familiar looking chart pattern to many of us because you take a look at a lot of names in this market right now. We have extreme overbought conditions. We have stocks that have just moved straight to the upside going back to June 1st. MU is one of those names where we've gone from $34 up to $47 as of today, and that happened very quickly. Okay, it's a very strong move. Not only can you see price action overbought, but look at the histograms down at the bottom. Specifically our pulse indicator, which is the red, yellow, and green histogram. Just here today, we got a green bar to print on our histogram. And that green bar indicates that we're between a 2 and a 3 standard deviation channel move on the upside. What that means, if you go back historically and start to take a look at what happens to the price of a stock, if you start to hit a 1, a 2, a 3 standard deviation move, oftentimes you start to see price action stall out. You start to see it get tired. You start to see consolidation or a reversal. It's a very common pattern. When you start to see a 2 standard deviation move, in this case on Micron, there's only a 2% chance of this thing continuing to the upside, meaning only 2% of all occurrences fall outside of the 2 standard deviation move. My interpretation of that is, do I want to be bullish here, expecting the stock to move to the upside, knowing that only 2% of all occurrences happen outside of this range? Or do I want to start to position myself for a period of consolidation or a reversal to the downside, which we fully expect? It's a repeatable pattern over and over again. That's what I wanted to hear with our options trade of the week for this week. We're going to take a look at putting on a neutral to bearish position that would benefit from MU starting to show a well-deserved pause. It's had an incredible run to the upside. So the basis for this trade is our pulse indicator getting to between a 1 and a 2 standard deviation channel move, and then just here today actually giving up above the 2 standard deviation channel move. That is why we're expecting this thing to start slowing down, potentially reverse. So we're going to go back over to the trade page. We're going to switch the symbol to MU. I'm going to stay with the August 16 monthly options, the ones with 25 days left to expiration. The reason why I'm staying with August, we mentioned it's a slow time of the year. We've seen it volume-wise in this market. The volume has been non-existent. The liquidity in this market is very, very low right now. The monthly options will have higher volume and higher open interest, and that's going to make it easier for us to get in and out of trades quickly and at good pricing. So notice what I'm doing here with these recent trades. I'm taking what the market's giving us. Do a lot of us get excited about trading long calls and long puts with the short-term weekly options? Yes. It's exciting because there's a lot of profit potential there. But that strategy is only going to work if the market's active, if you've got volatility, if you've got good range in the market. We don't have that right now. So instead of trying to force those aggressive strategies to work, let's get a little bit more conservative. Let's set ourselves up with trades that have a higher probability of success, so a higher winning percentage with a slightly lower profit potential. I'm fully willing to take that exchange because I know that's going to help me create a more consistent source of income. So on MU, we're going to go to the out of the money call options. I'm going to right click on the 48 call. I'm going to go to sell and select vertical. I'm going to sell the 48 call and I'm going to buy the 50 call at the same time. The reason I'm buying that 50 call is that's what's going to define my risk. It's going to leave me with a risk-defined trade that I feel more comfortable with. This one's trading for around 66 cents here at the moment. So if I click on confirm and send, let's break this trade down in more detail. So by selling the 48 call and buying the 50 call, I am collecting $66 per spread, and it's tying up $134 per spread of capital. You can do this regardless of your account size. It's a very reasonable trade. If you've got a bigger account size, MU is a pretty liquid product. You can trade 10, 20, 30, 40 spreads, still keep the risk at a manageable level, and you're not going to have any problems getting filled. So it's a really great trade regardless of your account size. And this also goes to show you don't have to be intimidated by credit spreads. Are we tying up $10,000 of capital here? No, you can tie up as little as $134 of capital, and that is the most you can lose on the trade, even if you are dead wrong on the position. Now, I'm risking right around 2 to make 1. Why am I willing to accept that? Because again, as we've talked about here today, we've got a higher probability of success. I've got multiple ways of making money on the trade. Let's talk about the directional move here that we're expecting. Look at the break-even point in this order confirmation box. The break-even point's at 48.66. That level is calculated by taking the 48 call that I'm selling. We're adding on the 66 cents that I'm collecting to put the trade on. That gives me my break even. I don't care if MU moves up, down, or sideways. As long as it stays below that number, I get to make money. The only move that hurts me is a move above 48.66. Well, price action is currently sitting just above 47. Okay, I've got about $1.50, just actually a little bit more than that this thing can move against me, move to the upside, and I can still make money. We mentioned we're already at a 2 standard deviation channel move on the upside. Only 2% of all occurrences will fall outside of this range. So can you start to see how we're putting the numbers, putting the percentages in our favor? It doesn't mean that this trade can't continue to move higher. MU could continue to move higher. It's just not statistically probable. We're starting to stack the deck in our favor by leaning a little bit more neutral to bearish here. So up, down, or sideways, I'm okay with all 3 directional moves as long as price action stays below 48.66. I make money from time decay adding up and from volatility decreasing. So I do give myself 5 ways of making money on the trade. Much better odds when compared to just buying a long put. I don't want to be highly bearish here because price action hasn't confirmed. It's actually very overbought. It's actually a very strong stock. I'd rather lean a little bit more conservative, and that's what the short call spread allows us to do. Just like the other trades that we reviewed here today, I'm targeting 50 to 75% of whatever I collect to put this trade on. If I can collect 66 cents, then if I can create the closing order for between 16 and 33 cents, that would give me 50 to 75% of my max profit potential. Okay, that's how we'll manage the position here over the next few weeks. If we can get the market to roll over, if we can get some pullback market-wide, it will allow us to make that money pretty quickly. If we just get the market to chop sideways or continue to drift to the upside, we're going to have to hold the trade longer and let time decay help us out over the next 25 days. So if you have any questions at all on the new MU trade that we're just putting on today, if you have questions on the VXX or the GLD trades that we covered earlier in the video, let me know. I'm certainly willing to help out with any questions. My email is mike@netpicks.com. I'd love to hear from you, or feel free to post a comment on the video or here in the blog, and I'll be in touch right away. So I'm going to wrap this video up here. Happy trading to you all here the rest of this week, and we'll be back with you next week for our next new options trade of the week.